Hi, accounting students, and those of you who have been wondering where today's lecture went. Oh my gosh, I had the most problems ever technically in class this morning with not one computer, not two computers. It's kind of been a week like that, you know, that happens once in a while. So what I want to do, what I did in class today was I went through the problems, not every single thing about the problems, but just kind of went through them and made sure that people were on the right track, and the students in class, if they had questions, they asked. So I just want to run through some basic stuff about the problems. I know that you can reveal the solutions to the problems on your own. They are available in Blackboard, or at least they're supposed to be. Today's been a strange day for Blackboard, but I think at the moment it is working. All right, so and if you have any more questions or if you're having problems with Blackboard, let me know through Remind or by email this weekend so I can help you. All right, so we started today by talking about exercise 3.8. I know that was an exercise, not a problem, but most students were having questions about how exactly to do this. It's asking you to take the accounts for this Three Brothers Moving Company and assign numbers to them. So that is a little bit odd, and it's a little bit confusing maybe at the very beginning. So let me show you just some clues on that. All right, so get my highlighter going here. Really, what you want to remember, if you're given a list of accounts, you just need to be able to identify what type of account it is. And here we have a heading for assets, and then the assets are listed down below here, and they are all given a 100 number. Notice that when they numbered them by every 10. That is so that there's room for numbers to go in between them and still keep things in alphabetical order. Don't get too hung up on that, but that's why there's space between them number-wise. Okay, so all assets are labeled with 100s. All liabilities are labeled with 200s. So usually we only have one liability, that's accounts payable, but you might see a loan payable down the road, and that would probably be a 204 or a 212 actually. Okay, so then 300s are owner's equity, and we only have two owner's equity accounts as a rule. So we have the capital account and the drawing account. And 400s are revenue, which at the moment we only have one stream of revenue, and that's just how we get our fees for the services we provide in our companies. And then 500s are expenses. So one thing we talked about in the classroom was trying to remember this, and we were just giving it an acronym, ALOR, A-L-O-R-E. Now when you're setting up your balance or your trial balance, you set up your trial balance in exactly this order, A-L-O-R-E. Now something I'd like you to also know, and we talked about it again today in the classroom, was of these chart of accounts, the ones that go on your balance sheet are the permanent accounts. Okay, permanent accounts, let me change my pin color here, are all of the assets and all of the liabilities and only the capital. The capital, not the drawing. Okay, at the end of a period, when we recreate our balance sheet, we end up with just these accounts on our balance sheet because we have put drawing into our capital, or actually taken it out, and we have used our revenue and our expenses to figure out if we added to capital or subtracted from capital. So drawing, revenue, and expenses have their effect on our capital, and it's just that bottom line of capital that matters to our final balance sheet for the period. All right, moving along. So the problem 3.1 did throw some people for a loop, and the kicker there is that each one of these items is independent. This is not 10 items or 8 items from one company. Each one is just a separate transaction, and it's an exercise trying to get you to just be comfortable looking at a transaction and making sure you're getting it recorded in 2 accounts and on the correct sides. So just glancing down your answers here, or my answers here, you can see that every single account or every single transaction is has the same number on the left of the T and there is on the right side of the T. Students sometimes ask if it's okay if they put the credit on the first T and the debit on the second T. That really doesn't matter at all. It's just that you get the two transactions or the two accounts of the transaction identified and properly put the information, the numbers on the right sides, on the correct sides. Okay. The second problem, a little bit of the same. This time I think we were doing transactions for the same company all the way through. Again, they're independent transactions, just drilling you on getting your accounts figured out per the transaction and which accounts they go in. All right. Problem 3, again, more of the same. And then problem 4 is kind of a real problem there with the T accounts that we accumulate all of the transactions in over the course of the month. Okay, this is the one that I've helped the most people with this week. Some pretty big problems with just identifying the correct transaction accounts and getting things on the correct sides. As you look at these, or you look at the ones that I've got loaded online, if you are just stuck on why something is the way it is, please let me know. I had great questions all week long on this. What I think is helpful for you to do as you are working with these kind of T accounts is make yourself notes as you go. For example, cash is an asset. Identify it so. Accounts receivable is an asset. Just any little note taking that you can do that will help you along the way, go ahead and do it. Office equipment is an asset. Office furniture is an asset. Someone asked me this week why these two items couldn't be combined into one account. Well, the reason is because office equipment is more like computers and fax machines and copiers, things like that, where furniture is desks and chairs. Your furniture should last like 20 years, okay? Your office equipment, your computers and whatnot are not going to last 20 years. So that's one way you can think of why they should be in two separate accounts. All right, and then down to accounts payable, that's a liability. Horace Brock Capital is an owner's equity. Oops. Another thing that you can do is highlight or remind yourself what side the balance goes on. So the balance of an asset is on the debit side. Debit side. Debit side. Debit side. The balance of an accounts payable is the credit side. And for the capital is the credit side. Okay. Let's see. Then finishing, trying to use the snip tool and the reader at the same time here. I'm struggling. Okay, so then with the rest of problem 4.3's T accounts, our drawing is an owner's equity account. Fees income is a revenue account. Sorry. And rent expense, of course, is an expense account. And the rest of these are expense accounts. You can label them appropriately. And then the balance of a drawing is always going to be on the debit side. Fees income, the balance should always be on the credit side. And then all expenses should have a balance on the debit side. Now again, this is kind of nice that all of these fell on this page. All of these accounts are temporary accounts. That means at the end of the period, they are going to be used in the net income statement and the statement of owner's equity to figure out if our owner's equity has increased or decreased. And then we haven't touched on this yet, but eventually before we start the next period, we're going to close these accounts. They're going to be zeroed out to start our next accounting period so that we can see how much money we make next accounting period. So they're temporary during the period, close them out, and start over with the following period. That way we can see how much money we make every month, every quarter, or every 6 months even sometimes. Okay, moving on with the problem. So now we take all those balances from above in our T accounts and we drop them into the trial balance, and again we do this in the order account of assets, liabilities, owner's equity, revenue, and expenses. Allure, okay? Here's another way to look at the temporary and permanent accounts. The ones below the line are temporary. The ones above the line are permanent. Okay, so now once our trial balance is balanced, we know we can move on with our income statement. And we make our income statement by putting in first the revenue, listing our expenses and having a total expenses, and then here we're showing a net income. Okay, we take that net income number and we drop it into our statement of owner's equity, starting our statement of owner's equity with the beginning balance of our owner's equity, showing our net income, showing how much money was withdrawn from the company this month, and then how much money we increased. Sometimes it's a decrease, but in this case it's an increase. And then we add those two together to get our new capital for the end of the month of June. This number showing the new capital then is dropped into our balance sheet. Okay, the rest of the numbers on the balance sheet came straight off your trial balance, straight off those accounts that we were doing. Okay, that's the B problems. Let's see, the next thing I want to show you is I want to just give you a peek at the Chapter 3 test, which has been available now today, even though Blackboard's been down a lot, but you have until Thursday to complete the Chapter 3 test, and please know that Chapter 4 materials and the timeline will be assigned probably tomorrow. I'll look into that and I'll figure out what days we need to be working on it. But you need to be looking forward to Chapter 4 even though you still have this Chapter 3 test to do, okay? We have to start the next one before the last one's finished, or else we'll never get through it all. All right, so looking at the Chapter 3 test, just giving you a little sneak peek at it, I want you to realize, because this is kind of an item that you haven't really done, so I want to make sure it's okay with you. We're reading each of the following transactions, determining the accounts to be debited and credited. That's all we're doing, is we're determining the name of the accounts to be debited and credited. The important thing here is which one is debited. It goes on the left, and the one that is credited goes on the right. Now, you can even imagine that there's a T account inside of them. Let me get my snipper back here. Okay, so we'll do these two together. Okay, so our first one is we performed services for cash. When we perform services for cash, we get cash. So we know that's the debited account. All right, so our answer here is going to be cash. But if you wanted to put it in a T account, you could, just to kind of get the gist of this. And here's where your number's going to be. They didn't tell us how much, it just says we got cash. And then the account to be credited would be fees income. I'm sorry, it looks like I'm a kindergartner. I'm writing with my mouse. I'll just abbreviate. And then if you did a T account for fees income, oh boy, I'm sorry, the number would be on the credit side. Okay, the next one says we purchased office equipment and we'll pay it in 60 days. Okay, so if we purchased office equipment, we got an asset. So that would be our debit. So the account named office equipment would be our debit. And the account to be credited, we're paying it off in 60 days. So that's going to be accounts payable. Sorry for the abbreviation, but it's probably painful for you to watch me write with a mouse. My slick little computer with the touch screen is being so stupid right now I can't use it. Oops, not receivable, payable. I shouldn't talk at the same time. Let's see. Accounts payable. I shouldn't talk while I'm doing this. Okay, so that gives you a little sneak peek at the problems. Ooh, and underneath here, here's a good one we can look at. Purchased office furniture on credit, but we paid half for it now and half of it later. There's a clue here that says accounts to be credited. So we're getting more office furniture, so our account to be debited would be office furniture, and we would credit two accounts, cash and accounts payable. Okay, so that's a sneak peek at that portion of the test. Let me move on and show you the problems that you'll be completing. I'm giving you a trial balance. You just have to put the heading on it, the 3 lines of the heading. That's it. Now you take this trial balance and you're going to use it to create the 3 financial statements. Okay, so starting with the income statement, make sure you put your 3 lines at the top. Start with your revenue, your fees, income, then expenses, list your expenses, and then figure out if you have a net income or a net loss. Okay, then to prepare your statement of owner's equity, of course you head it as appropriate. You start with a capital at the beginning of the month. You find that number by looking back at our trial balance. Joan Martin's capital was $19,200 at the beginning of the month. That's your starting point. Then you add or subtract in your net income or your net loss. You take out any drawings. Was there any drawings? Yes, we took out $3,500. So you'll take out your drawing, and then you will show your new capital for the end of the period. Then you will create your balance sheet. You will get all of your numbers for the balance sheet from your trial balance. You will have 3 assets and 1 liability. This number is now changed. You arrived at that number in your statement of owner's equity. So here is that number from your statement of owner's equity is what you'll put in your balance sheet, and then you should have a new total for your company's balance sheet. Okay, that is all. I hope that helps you and relaxes you a little bit about the test. As far as getting the test to me, it is sometimes hard for me to read your tests and your assignments if you just take a picture with your phone. I don't mind that for problems and exercises because you're really just proving to me that you completed them. I don't really have to be able to see the exact numbers, but on the test I do. So if you print this out and do it on paper, that's great, but then please scan or carefully take your pictures of your test to send it to me so that I can see it. Okay, now I think you're caught up with what I talked about today in class. I did start talking though about chapter 4, and we looked into chapter 4 too. The chapter 4 test amazingly is a lot similar to this chapter 3 test, aside from the individual transactions. On chapter 4 we're going to do a whole month of transactions, and we are going to post them into their appropriate accounts. So we're going to do something new next chapter called posting. And but then in the end you make the same statements. You make the trial balance, income statement, statement of owner's equity, and the balance sheet in the same order as you have learned so far. So that never changes as we go forward. I hope this video helps. It probably was better because it was shorter than listening to class, but the nice thing about you guys from online listening to what's happening in the classroom is you get to hear the students' questions, and I know that is helpful for you too. So I apologize for the 10 things that went wrong today electronically in my world, and then Blackboard, and you name it. So I do hope this video helps you get through chapter 3 prepared and taking the test, And then stay tuned. Chapter 4 flow will come out soon, the timeline for Chapter 4, and we will need to be doing that during this coming week. And I need you to be ready to go over exercises by Friday, if you're in the classroom or if you're participating by WebEx or just by listening to the video on Friday. I want you to be ready to go over exercises. So that's my plan. All right, have a good weekend. I hope the extra day is helpful for you. I know it's going to be helpful for me.